Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, January 10th, 2024. So we saw, pretty decent day today. It seems like a lot of the bulls are front running the CPI numbers coming tomorrow. On the ES in the morning notes, I said it did look like it was a consolidation pattern, and that would be suggesting that we would have another move higher before the bulls really have to or say Mr. Market has to decide on whether they're going to try to start stretch for the all-time highs or they're going to make some kind of double top, and that's pretty much where we are right now. The inverted head and shoulders pattern. I mean, inverted the head and shoulders pattern. It still could be there. It's getting a little high for the shoulder, but as long as this isn't taken out, it still could be the shoulder. It's just a little, I mean, I would have liked to have seen the bears hold down this line right here. But in any case, you can see we have some bearish divergences starting to form on the hourly chart, very overextended. And again, that's after just a massive nonstop move. So, as I've been saying, on a daily chart with, hang on one second as this loads. Okay. So, as I was saying on the daily chart, with these types of divergences that we see, typically this is not enough of a drop. We could be making some kind of ABC move, and really, a test of the 200-day moving average would be more likely. I mean, it would be probably healthier for the market because you can see we have this support level here, we have the moving average. It would close some of the gaps and really give the bulls some refueling, well needed refueling, because there's been nothing as far as refueling here except for a few down days in 100 points, or not even a little bit more than 100 points, but nothing major of a drop, and we're back up again. So it's, to me, if the bulls are going to try to sustain this, we're going to have a little bit of a deeper pullback, because they're not going to be able to continue this trajectory, to say, just because they're going to just run out of buyers, and people are going to start looking at the valuations. They're going to start looking at the valuations of the S&P, and they're going to just back away, and they're not going to chase up here, and we'll just have a natural move to the downside. But right now, it's kind of up in the air. If the CPI numbers come in, and the street likes it, and we take these highs out, then obviously the next move is going to be up to these highs here, which is right around that. It's to do Where is it here? 44, 48.14. So that would be the upside resistance that the bulls would have to get through. And again, this is going off of some massive sell signals and zero breathing room after a 600-point move. And again, everybody's really hoping that the Fed's going to sit there, and they're pricing in six rate cuts. And if the Fed does six rate cuts, I was actually listening to Bob, I forget his name, but he's one of the big fund managers, and he was kind of saying the same exact thing that I'm saying, where if the Fed's going to do six, rate cuts, we're going to be in the middle of a recession. They're not just going to cut rates for the hell of it, and they put themselves in a sticky situation, and they can't control what the government, what this administration's doing with spending, and that's going to keep inflation elevated until that stops. And right now, they don't have any intentions of stopping it. So let's just take a look at some pivots real quick. Basically, it's pretty simple for the bulls. They're going to have to get through this 4,800 level, or 47.93. If they do, then that's going to open the door for the 48.18, or the previous highs. The bears, the first thing they're going to have to do is get it through this 47.64. If they do, then we should be coming down and testing the 47.43. And really, once we start getting this is the support area, that say the I would say the short-term bull bear line, and that's going to be the 47.30, because if the bears can get through that, then we're coming down and we're going to be testing the 46.83 level. And if we're there, then we start, we start looking at moves coming down to this to the 45 54 level, or even closing some of these gaps at 44.20. So let's see what plays out tomorrow with the CPI numbers. Have a great night, and I'll talk to you guys in the morning.